Felix.
I guess today talk more about C Limited, ticker SC, since I'm feeling a little bit better. Since our best short report less than 2 weeks ago, the stock is down 20%. By comparison, its US peer Amazon is down about 3%, and the global e-commerce ETF is down about 6%. So why do I compare with Amazon? Because C Limited is a giant conglomerate that has a gaming, e-commerce, and fintech business. And comparisons with Amazon are pretty popular among investors, given that its surging e-commerce business called Shopee has just been on a hockey puck line up. In the last few years, because SE, they
puck flying up.
No, I said it wrong. I mean, hockey stick up. Sorry, I don't know the right terminology here, but
the hockey puck flies up too. But I've never heard that before. That's awesome.
So C now has a $115 billion US market cap. It went as high as about 200 billion at its peak. Despite the recent plunge in the last couple of weeks, it's still trading about 14 times higher than its IPO only 4 years ago. So a couple background things on C. So C is a Singaporean company, but it has a lot of Chinese influence. For example, Alibaba is its biggest competitor in many of the Southeast Asia regions and also in Latin America. But for C's stock to work, it has to continue to show far superior growth versus its peers in gaming and also in e-commerce. But if I'm right on the changes in the competitive environment, their growth path has become a lot harder and a lot more challenging, which means substantial downside to their estimates next year and also in 2023. So I argued my points in depth on the gaming business last week, and I'll talk about more on their e-commerce business in January. So C has been a darling over the years. It kind of reminded me of Pinduoduo to some extent with their business model. A lot of hedge funds on it. So I've had a lot of spirited conversations since my call. But keep this one on your radar, Keith, on the short side.
Anytime you give me a short, it's on my radar. It'd be more so on my radar when China was bearish trade and trend every bloody day from January until the bloodiest of days in Q3, and then less so in Q4. But so a couple points on this. One,
hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.